Ethereum is gearing up for what could be its most consequential upgrade of 2025, the Fusaka hard fork. Tentatively slated for November just ahead of DevConnect in Buenos Aires, Fusaka promises a suite of 11 Ethereum improvement proposals, ETHs, designed to turbocharge network performance, expand capacity, and bolster security. Among the most eye-catching are IP7825. It's targeted at hardening the protocol against malicious actors while scaling validator throughput. And the proposed gas limit, hiked to 150 million per block, which, if approved, would dramatically boost transaction processing and trim latency. Developers have prudently sidelined more controversial tweak SIPE 7907s. Call to double contract size and overhaul gas metering was cut to keep the DevNet trial timeline on track. And the long-debated EVM object format remains postponed. Public testnets will trial Fusaka's features in September and October, giving node operators and clients 6 weeks to polish their implementations before mainnet activation. Yet critics within the community caution the schedule is aggressive. Nixo, an active ETH protocol advocate on X, asks whether 6 weeks is truly sufficient to vet client stability, given Fusaka's scope. If validators and node clients clear these hurdles, Fusaka could deliver tangible improvements that further strengthen Ethereum's bull case. Faster block times and higher throughput translate directly to lower gas fees and more predictable transactions, incentivizing developers to launch high-frequency decentralized finance DeFi applications and real-world asset tokenization. Projects that have shied away from Ethereum's historically high fees. Enhanced security proposals bolster confidence that the network can withstand flash loan exploits and other attack vectors, which remain a drag on institutional and retail. Willingness to lock capital on chain. By making Ethereum more user-friendly and enterprise-grade, Fusaka dovetails with growing institutional flows into spot ETFs and staking vehicles. If fees fall and finality speeds up, the yield-earning potential of staked ETH becomes more appealing relative to cash alternatives, potentially sustaining the current rally at the same time. Broad community consensus behind raising the L1 gas limit to 45 million endorsed by nearly half of staked ETH. Per Vitalik Buterin's recent comment signals readiness to scale on-chain capacity immediately after Fusaka's launch. This change alone could slash gas prices during peak activity, smoothing out transaction backlogs and making DeFi protocols more accessible. Looking further ahead, the next hard fork Amsterdam in 2026 may push block times down to 6 seconds and enact deeper optimizations, crafting a clear upgrade cadence that institutional players can roadmap and build around. Such predictability is vital for corporate adoption. Banks and asset managers need confidence that Ethereum's performance curve will continue its upward trajectory, yet lofty expectations demand scrutiny. The tight Fusaka timeline raises the specter of unintentional bugs or client incompatibilities. A degraded upgrade could produce chain splits or unintended denial of service vectors, the very risks Fusaka seeks to mitigate. Ethereum's testnets, historically, have flagged issues only discovered at scale on Manwatt, and even a single client failing to consolidate around Fusaka could thrust the network into uncertainty. Moreover, raised gas limits while enabling throughput also increase state bloat and node storage requirements, potentially centralizing validation among operators with deep hardware stacks and sidelining smaller participants, eroding Ethereum's ethos of decentralization over time. A market psychology standpoint, the Fusaka narrative may already be priced in. Ethereum's price has soared 7 straight weeks, up 27.4% in just the last 7 days, as bulls celebrate breaking resistance at $2,850 and $3,750. Yet daily trading volume is down 12%. And while RSI nears overbought territory, CMF has yet to exceed plus 0.05, suggesting capital inflows into ETH remain strong, but not euphoric. Open interest heat maps from Coinlass highlight liquidation. Zones at $3,800 and $4,100 levels ripe for stop hunts or profit-taking should weaker hands. Cash out ahead of Fusaka, in other words, Ethereum's next major resistance zones. could prompt short-term pullbacks, irrespective of the protocol's technical merits. A sudden market reversal driven by macro shocks such as hawkish Fed commentary or a severe Bitcoin correction could derail Fusaka's bullish buildup, leaving ETH vulnerable to gap fills back toward $2,800 or even $2,000 under extreme conditions. Critically, much of ETH's recent rally has been driven by derivatives. Per on-chain data, 95% of circulating supply is in profit and elevated. Futures open interest underscores how leveraged positions have amplified the move. Heavy reliance on margin-based demand poses a double-edged sword. Should market sentiment shift or funding rates spike, cascade of liquidations could accelerate downside pressure, temporarily overshadowing Fusaka's upgrade optimism. Contrast, genuine spot, demand driven by gray area ETFs, DeFi protocols, and long-term staking provides more durable support. But spot flows remain dwarfed by derivatives volumes at present. Institutions, whales, and savvy retail are all watching Fusaka closely. If Ethereum's hard fork succeeds without incident and the promised capacity gains materialize, ETH's crown as the leading smart contract platform will shine ever brighter, potentially catalyzing fresh waves of adoption and price appreciation. However, the very success of Fusaka may prompt overnight shifts in development focus and capital flows. As attention turns to second-layer scaling solutions, cross-chain bridges, and upcoming upgrades like Glamsterdam, Ethereum's narrative, ARC is accelerating in. While each chapter brings new opportunity, it also introduces novel complexities and risks. For those weighing stakes or strategic trades, the prudent path may lie in fractionally participating in ETH upside, hedging with short-dated options around known resistance levels, and closely monitoring client upgrade metrics and testnet health as Fusaka's manat date looms ultimately. Whether Fusaka will propel Ethereum to the moon depends on a tightrope walk between engineering rigor and market timing. If the upgrade unfolds seamlessly and elevated on-chain usage coincides with sustained institutional inflows, ETH could well challenge $4,100 and beyond, setting the stage for a continued post-merge bull cycle. But if client bugs, gas limit, side effects, or macro headwinds surface, the upgrade could catalyze a period of consolidation or even a corrective drawdown. In crypto's relentless arms race, every protocol cadence is a microcosm of broader industry trials. Success begets momentum, failure begets introspection. As Ethereum forges ahead with Fusaka, market participants must navigate a terrain defined by both unprecedented opportunity and the ever-present specter of technical missteps. Balancing faith in the network's evolution with rigorous attention to emerging risks,